If you invest in AI stocks without knowing these three mistakes, you will almost certainly end up in the 90% who lose money in 2026. Let me show you exactly what not to do if you want to be in the smart top 10% of AI investors. Welcome back to Future Finance Lab. In this video, I want to give you a serious warning about AI investing in 2026. AI is exploding. Everyone is talking about it, but most beginners are making the same three deadly mistakes. If you avoid these, you're already way ahead of the crowd. Stay till the end, and I'll give you a simple three-step framework the top 10% follow. First big mistake, chasing hype. A lot of beginners are buying any stock that has AI in the name or in the news. Social media says, this is the next Nvidia, and people throw money at it without checking the business. Here's what the top 10% do differently. They ask, does this company actually make money from AI? Is there real revenue, real customers, real products? Or is it just using AI as a buzzword in presentations? For example, companies like Microsoft, Google, and Nvidia already generate billions from AI-related products. That is very different from a tiny company that suddenly rebrands as an AI stock just to pump the share price. If you don't check the business behind the AI story, you're not investing, you're gambling. The second mistake is going all in on AI. Beginners see AI as the future, and then they put 50%, 70%, even 100% of their portfolio into AI stocks. That's how portfolios get destroyed. The top 10% think in terms of position size. One single AI stock is usually only 3 to 5% of their total portfolio. Even the whole AI sector might be 20 to 30%, not everything. Why? Because AI stocks are volatile. They can go down 30 to 50% on bad earnings or bad news. If each bet is small, you survive any one mistake. So if you're putting too much money into one AI stock, you're not acting like the top 10%. You're making the classic beginner error. The third mistake is trying to time the perfect entry. People wait for the perfect dip, or they keep jumping in and out, trying to trade every move. Most of them end up buying high and selling low. The pros know something simple. Time in the market beats timing the market. Especially in new technologies like AI, nobody knows the perfect entry. Instead of guessing tops and bottoms, they pick strong AI businesses. They invest regular amounts over time, what we call dollar cost averaging. And they think in 3 to 5 year time horizons, not 3 to 5 days. If you're obsessing over the perfect entry price, you're doing what the 90% do, not what the top 10% do. Okay, so how do you act like the top 10% of AI investors in 2026? Here's a simple 3-step framework. First, business first, buzzword second. Only consider AI companies with real products, real customers, and growing revenue. Read the earnings reports, not just the headlines. Second, position size rules. Keep each AI stock at 3 to 5% of your portfolio. That's enough to matter if you're right, but not enough to destroy you if you're wrong. And third, have a long-term mindset. Invest regularly over 3 to 5 years. Accept volatility as normal. Focus on owning pieces of real businesses, not chasing quick trades. Do this, and you're already behaving more like the top 10% than most people buying AI stocks in 2026. If this warning helped you, tap like so YouTube shows it to more beginners. And subscribe to Future Finance Lab for more clear, simple AI investing videos. Comment below. Which of these 3 mistakes are you most guilty of right now? I read every comment and might turn your question into a future video.